We're Compound Everything. We talk money, markets, and investing. And today we're going to talk about the upcoming year, 2025. Last year we did one for 2024. And we said the SPY would hit 600. And we said Bitcoin would hit 100,000 Canadian, which it
blew past,
and a few other things. So we thought we would do that again this year and see how right or wrong we are at the end of 2025.
We'll see.
Yeah. So last year was a crazy year. It was good for stocks. I think the S&P returned something like 30%.
Something like that.
Or something, and something like it's only done that 9 other years.
It's a handful of times.
Yeah, and we had interest rate drops, which people were anticipating, although we had a lot in Canada.
More than the U.S.
Yeah, and the U.S., I don't think they had as many as they had.
And that's actually contributed to a weaker dollar for us.
Yes.
Which has made things kind of interesting in terms of travel and purchasing. And funny, I don't think we've seen the end of inflation yet in Canada.
Oh, no, not at all. Not at all. Although our dollar did go up a little bit today on news of our Prime Minister, Mr. Justin Trudeau, resigning. So nothing like resigning and having the dollar go up.
That tells you what the market thinks of your job.
Exactly. So it was kind of a crazy year. It was really good for stocks. It was really good for cryptos, particularly Bitcoin. So I think with real estate, it gets hard with us because it's like, are we going to talk about the Canadian market? Are we going to talk about the American market? Because they are two very different markets.
I would say, based on knowledge base, I would talk about the Canadian market because I don't know much about the American market.
Yeah.
I'm going to be honest, I saw just a post today someone put up on X, which was a house in Texas, which was $315,000 for this beautiful brand new home that in our area here in Canada would probably go for somewhere, I'm going to ballpark $1 million, $1.2 million.
Yeah,
and it's $315,000 in Texas.
Yeah, and what people have to know is that, like, in our province, our houses aren't super expensive. Like, we don't live in British Columbia or Ontario where housing has gone really crazy. We actually live in one of the more affordable provinces when it comes to housing.
Yeah, just as a ballpark for that house, I can't remember all the square footage and price per square foot and all the direct comparables, but as a gestalt, that house would be probably $1 million, $1.2 million.
Yeah, that's
and
crazy.
So from that standpoint, I cannot comment on the American market at all.
It just doesn't make any sense.
It doesn't make any sense at all because that just blows my mind.
Okay, so what is your prediction for the Canadian real estate market for 2025? How's it going to look at the end of the year?
So Canadian real estate market, I think at least where we are, will probably be flat. I'm hoping actually because I think it's had a crazy run up and that's probably led to inflation and inflationary pressures. The Canadian government has actually issued a limit to immigration and immigration thresholds. So from that standpoint, I think there's going to be less demand there, but that's going to probably be tempered by declining interest rates. So interest rates are probably going to drop down some. So that may balance out the supply demand a little bit. So with people having more access to borrowing and less, that's going to put pressure upwards on prices, but with maybe less buyers, that's going to maybe cause an equilibrium there. But on the other hand, Canadians are already leveraged, like to the hilt.
I think that Canadians' debt to income is something like 180%.
That was a figure I read as well.
Yeah, so a lot of Canadians spend 80 cents more than every dollar that they're actually earning, which is an incredible and alarming statistic.
And even if you drop interest rates at that point, I think a lot of people are going to find they're too debt saddled and they may just take that opportunity to pay down their debt rather than acquire more. So that should also have a bit of a tempering response to even declining interest rates. So we'll see what ends up happening with that. My prediction is flat.
Okay, flat. So just quickly before we go on, we do want to say in Canada, you can only lock in an interest rate for 5 years.
That's right.
That is the maximum amount of time that you can lock your interest rate in. So we have a very different landscape for real estate here.
Very much so. You can amortize that over 30 years. So the interest payment or the payments will be amortized over 30 years, but you must renew at every 5-year intervals.
Anyone in Canada who locked in 2020 or 2021, you're coming up to renewing.
And your landscape for renewing is going to be very different than when you took out that mortgage.
Right. I would think that most people are doing variable right now because everyone kind of knows that the Bank of Canada is aggressively dropping interest rates because our economy is so broken and Canadians are so poor that our central bank knows it needs to lower. But that comes with other issues. So I think as they lower interest rates, and of course we have the whole immigration policies changing, which also is going to change stuff and whatnot. Millennials are now, I think they said the oldest millennial is now 40 or 41. So they're making more money. I actually think that our real estate is probably going to increase.
Interesting.
I don't think immigration is going to make that much of a difference on housing prices. I think the bigger issue is going to be the lower interest rates. I think Canada is going to have sticky inflation and worse, rising inflation.
I think inflation will probably be sticky as well. And that, I think, is
going to really affect the real estate market.
I've seen forecasts for the interest rate being somewhere in the realm of 3.25 to 2.25 percentage points. So we'll see where it ends up in that range. I have a feeling that they're probably going to be fairly aggressive in their cuts early on in the year, and it'll probably find some sort of equilibrium toward the tail end of the year. Although with the weaker Canadian dollar, that's going to be a problem with inflation for Canada. And I could see the Canadian dollar actually getting worse before it gets better, because I'm going to be honest, the economic outlook in Canada right now isn't fantastic.
Oh, it's very bad.
In terms of GDP. I was reading an article from the Bank of Canada that was published in October that forecast between 2 and 2.5% GDP growth. And that was revised down by the BDC, Business Development Canada, and several of the banks, RBC, I think TD, they're all forecasting a 1.5% GDP growth. And those were published in December. Another interesting thing, going back to GDP growth actually for Canada, you may go, okay, well, 1.5% GDP growth isn't bad, but a lot of the world is probably going to be growing faster than that. We know the US is growing faster than that. China is aggressively cutting their rates to try and reverse course on their economic downturn, and they have a bit of a poor economy right now. So it's interesting. It'll be interesting to see what China does. So if China manages to achieve growth, I think they're forecasting growth of like 5%. So if you look at growth in the U.S. is accelerating. If you believe
China's numbers.
If you believe China's numbers. And if you believe that China can grow at 5%, investing in a place that grows at 1.5% doesn't look so great.
Yeah.
Bottom line.
Yeah. So let's move on to our favorite area to put our money, and that is the stock market. So we actually prefer to invest in America. I think I've put on threads before, we make Canadian dollars, and as soon as we have them, we buy American assets.
That's right. Yeah.
So we put most of our money in American companies, not all of it. We do have some China positions that have been taking a long time to play out, but most of
and some stronger Canadian companies.
And a few stronger Canadian companies. But let's talk S&P, because that is the benchmark that everybody loves to use and talk about, and it's fun. And it's fun to go back and see, like, did I call it right? Was I right? Was I wrong? What about the professionals? Did they call it right? There was a lot of people in 2024 who said that we were going to have a huge economic downturn and the S&P wasn't going to return what we're used to anymore. And well, they were obviously pretty wrong. Yeah. So what is your prediction for the S&P 500?
Honestly, I think there's going to probably be a pullback in the S&P 500. It's had a pretty sharp rise, and usually with a sharp rise like that, there's going to be some sort of correction. I think that earnings from a lot of the businesses will be good, but probably not as good as expected. So I think earnings from businesses are going to be good, but I think the market is probably pricing in too much into that. So I think that investors are going to be somewhat disappointed. Like when you have Apple trading at a PE right now of 40, that is pretty lofty for a company of that size. And we'll just use Apple as an example. The narrative there is there's been some recent upgrades in terms of price targets from analysts because of the whole super cycle upgrade and that kind of thing. And something to the tune of hundreds of millions of iPhones need to be replaced because they're developing new AI functionality. I am quite bullish AI, but I've tried Apple's new AI on my phone. I have a newer phone, so I've managed to download some of that. It's all right. Like, it's okay, but I could do the same thing if I just downloaded the Chat GPT app to my phone and actually have a more conversational approach to things. So just using Apple as an example, a PE of 40 for Apple seems to me to be lofty. And then if there's even a sniff that high earnings multiple is not going to be merited based on the AI developments, then the ratio, the PE is going to come down.
And
Has to.
that's going to affect all of the Magnificent Seven if you're speaking of AI.
Yeah.
But the issue with AI, because I mean, obviously I'm bullish that too, is that AI, whether you incorporate it into your products or bring it to your consumer or whatever, it needs to translate into sales.
Absolutely.
So for a company maybe like Nvidia, that will probably transfer to sales
Yes.
for them. So maybe it looks a little different for them. I'm not saying it does or doesn't, but for something like Apple, is their Apple Intelligence, as they call it, really going to convert into more money for them? And like right now, like you said, like I would never upgrade my phone based on what I've seen so far.
Yeah.
I haven't heard one person say, oh, wow, yeah, like I'm going to give up my Android for Apple Intelligence. It has to create dollars for their business.
That's right. And there's a high expectation in the market now for, pretty much stocks across the board. When you're looking at, Schiller PEs, I think it's like something to the tune of like 35 or something like that. So there's a lot of hope being priced into a lot of these businesses. And I can't see it playing out the way that investors hope.
So what is your end of year call, that being said?
So I think there's probably going to be a fairly substantial pullback in the S&P at some point. Maybe I'm just going to spitball here and say 15% at some point. And I think it'll end the year flat.
Okay, so flat being like 600?
Thereabouts.
Okay,
Yeah.
So you think we have a flat 2025?
I think we'll have a flat 2025.
Okay. So my main concern for the stock market is that Jerome Powell came out and alluded to the fact that they were not going to be as aggressive in dropping rates. And we all know how rates affect the stock market. So that being said, I don't think it's going to be as bullish as we thought. There's a new administration that's coming in that is very pro-corporate America.
Yes.
Right?
Yeah.
And I mean, let's be honest, Donald Trump does not like to lose.
He does not like to lose.
And he likes to brag
Yes,
about
of course.
what he's done. And he particularly likes to brag about what he's done for the stock market.
Of course.
So he is now here. I don't honestly think that the president has that much say over the stock market. I think
either.
there's too much going on in the background, at least in the long term.
Yes.
But he's going to do what he needs to do to make sure that he can say that the stock market returned X amount while he was...
Well, he was president.
Yeah, it wasn't just a great year.
It wasn't just a good year, it was a great year.
It was a great year.
Yeah, that's right.
And so you have that working with it. But then, you do have the Federal Reserve kind of, in a way, working against that. Then, again, we have like these super valuations.
Yeah.
Crazy. The Magnificent Seven, how big can it get? But again, people have been saying that since 2016, 2017, when it was FANG. People were saying,
true.
how much more can FANG return?
Yeah.
And on, and people have been bearish for so long. And imagine being one of those perma bears who's been calling a big crash since 2017.
Yeah.
And you just missed out on all
missed out on all the growth.
On all the growth.
Yeah. I mean, to your point, just going back for a second, just to Apple there and, the expectations that are there. Apple's price has been appreciating not on earnings really at all, which have been quite flat actually, but rather on PE expansion. So pretty much when we took our position in Apple, I think it was trading at a PE of about 15, and now it has a PE again of 40.
Yeah.
So all the growth that's happened there for Apple over the past few years has actually been PE expansion and not revenue expansion. So if that's happening with a lot of other businesses, it's just being priced up because of expectations, I think there's going to be the chance of a substantial correction.
Also, and I think you had said this when we were talking, we said, because I personally think energy is going to do really well. We're coming up on a big energy. I'm so bullish
100%
energy.
with you. Yeah.
Energy and consumer staples, I think they're ready and they're ready to fly. And that's my own personal conviction. Do your own homework. But even if some of these energy companies return, a lot, go up 100%, 200%, or 50% or whatever.
Yep.
And consumer cyclicals, if they go up, 20, 30, 40, 50, 100%, their market cap is not even going to be anywhere close to what the Magnificent Seven. So
won't touch it.
Yeah, even if the Magnificent Seven stocks fall by 20% and these other smaller companies have incredible years, they're still not going to be able to bring that PE back up for the S&P.
That's right.
Okay. All that to be said, I think we're going to have a substantial correction at some point during 2025. I think it's going to be a 15 to 20% drawdown. That being said, Michael Burry himself has said that we are the best dip buying generation to ever exist.
He's not wrong.
I think it's going to be a short-lived bear market.
I concur.
And when it turns, I think it's going to fly back up. And I think we're going to end the year still flat because it has to come back up, but we're going to go raging bull into 2026.
I think I concur with you. I think I believe that.
Yeah. So that's for the S&P. So I think we're going to end 2025. I'm going to say around 610-ish.
Sure.
We're going to end there. That would be pretty flat from its all-time high. But there is going to be a significant opportunity, I think. Again, this isn't investing advice. But for sectors, I think it's going to be energy and consumer cyclicals that I'm going to kind of keep looking at. If the opportunity presents, then I'll go back into the or I'll add to the Magnificent Seven.
Yeah.
But I think energy, this is going to be energy's year to shine.
Yeah. Oh, and just because of AI.
Yeah.
Literally,
the
AI
amount of
requires
energy.
so much energy and whatnot. Yeah, I'm bullish energy strictly because of AI. And I mean, we were talking about this the other day. I don't know that there's ever been a time in history where energy consumption has actually dropped.
No.
Right?
Yeah.
You know, more energy, the more possibilities. So from that standpoint, I'm very bullish energy.
And that's our AI play.
Yeah.
Our AI play is not actually in the tech sector. Our AI play is in the energy sector because AI just takes up it's an energy pig.
Yeah.
And
well, and you look at a lot of companies now. So I think Meta, Microsoft, and there's been a few others that are actually talking about, I think an Amazon, maybe another one, putting online mini nuclear reactors. That just tells you how energy thirsty AI is. And I mean, of course, these data centers and whatnot, they require a lot of energy, period. Hands down. So I think energy will probably be a decent play in the next few years.
Yeah. I'm really bullish energy and I'm semi-bullish retail.
Yeah, fair enough.
Okay, moving on to Bitcoin and cryptos. Let's leave cryptos out because that's like that's almost like looking at art and wines as an investment. We just don't know much about.
That's more challenging.
We don't know much about altcoins and stablecoins, so it's not even in our wheelhouse, so we can't even really discuss that. But let's talk just Bitcoin.
Okay. So Bitcoin, I see probably rallying. I think it's going to continue on with a significant rally still. I'm quite bullish Bitcoin. I'm just kind of waiting for a reasonable entry point. I don't know where that is.
Yeah.
I'll maybe let you know if I figure that out, which I probably won't. But at some point, I think I'll probably increase the position in Bitcoin.
Interesting story. You actually sold your Bitcoin right before the
run-up.
The most recent rally.
Yeah.
Because we purchased a cabin.
We purchased real estate,
which
I think is going to be flat.
So that's like one of those examples, like you just can't time everything.
You just can't time everything.
But we needed to get some liquid
assets liquidity.
To purchase. We needed liquidity, and Bitcoin, it had run up. It was such a significant run up, so it made sense. But I think maybe 3 months, 4 months after you sold that position, yeah. So I hold a smaller position of Bitcoin, I think, than you did, and I'm still holding. I am super, super bullish on Bitcoin this year because we have the most pro crypto administration in America that we have ever had. Mr. Gary Gensler is gone.
Yep.
That is so good. They're going to bring in someone pro crypto, pro Bitcoin, and they're just really pushing it. I mean, maybe it was to get votes. Maybe they're not as pro Bitcoin as they claim to be. Everything in politics is about votes. But needless to say, I really think once this administration is in, they're going to try to prove that they weren't lying about that and that they really are pro crypto. And I think we're going to see a pretty decent run up for Bitcoin. Not like we've seen in the past because the market cap has already gotten so big, but we're going to see a pretty decent run up. And I think that Bitcoin will in fact hit 150,000 American. You know what? No, I'm going to go even crazier. I am going to say that it will hit 175,000 American at some point in 2025.
Interesting. Okay. We'll see if that happens.
Yeah.
Yeah.
So, I mean, who knows? Maybe people will sell their positions because they've made money and then we're going to have a mass sell-off. Bitcoin is very risky.
It's very volatile.
There's no valuation to it.
Yeah.
You got to do your own homework. You got to feel comfortable with it. Again, I wouldn't say buy Bitcoin. It's a super small percentage of our portfolio.
Yeah.
But I heard someone say, I own Bitcoin because if it ends up being something, I don't want to miss out. So I put enough in that I can afford to lose, but that if it goes crazy, I'm happy I had that position.
Yeah.
So that's kind of how I think about it.
Yeah, and I think that's very wise. And that's how we manage our portfolios as well.
So I think for me, that's everything. We've touched on real estate. We've touched on the market. We've touched on Bitcoin. Those are my 3 main areas that I invest. So I'm going to leave it there. But is there anything else that you want to add for the upcoming year?
I think not really. I think that a lot of the stock run up based on, Trump's administration has probably been priced in already. So it's going to be an interesting year to see where things actually play out as to the market's expectations. We've made our predictions, so we'll see how right or wrong we are at the end of the year.
That's everything. And if you can like and subscribe this video, that really helps our channel. And we will see you next week.